Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is a Monday, and there are definitely red arrows around the world, and they started here, and they started here big time. Okay, I was just on Bloomberg with my friend Alex Steele. If you want to, I'll show you that segment a little bit later. And we just talked about what could you have seen? You know, where was the technical damage first, and what's next? So it's hard to say what's next now, but when you're in the moment and you're isolating and you're examining, patterns, you really have to be so quick, especially if you trade for alpha. Now, if you look at the chart of the spiders, I don't know how many times we talked about this range. This range was monotonous. This range was long. This range was from February till August. Then all of a sudden you had an inside range where, yes, we played with the 8 and 21 day a lot of times. We played with the 200 days so many times. And what a range is meant to do, it's meant to make as many people as frustrated as possible so when it breaks, nobody's on it to the short side and they sucker enough people in that they fall asleep and they don't get out. Well, hopefully you didn't do that if you watch this show, because right here on that day the minutes happened, we closed below all the moving averages, and I think that was when my VTF was basically flat. And then if you didn't do it on that day, on that Thursday, I know it might have been painful if you didn't get out on Wednesday, but on Thursday, you had this engulfing day that just took out the bottom support of the range. So let me tell you something. When you're looking at a range and you're waiting for resolution, you never know how fast it's going to resolve to the direction of it, and you didn't have to know what direction it was going to go. You didn't know how, even if you were leaning upwards and you were trying to play 3-4 things, like I was trying to do a little bit here and there, during a certain portion of the end of that range. Once it broke below, you have to get out of the way. And then once you broke below, if you're looking to be short, you better have pounced. If you've been trying to be short the past 3 years and you didn't get short on Wednesday or Thursday, into that, that hard break, chances are, I don't know, maybe you got a little worn out because for the last few years, every time things looked like you were ready to go lower, it didn't. But anyway, so you go back to this range. So what did you know after this happened? You knew high of the range was about 213, low of the range, somewhere close to, 204, 203, 10 points. That gives you a measure to move down to about 193 to 195. So right there, you should really not have been a buyer for any thought of a bounce until at least you got down to below, this support, which was, remember we talked about 1980, and I think that's where it kind of paused on Friday or below. So this was Friday. So if you got out here, got out there, you took no pain on Friday. Okay, if you got in short here and you added there, you got fully paid. And I know a lot of guys that did that made a lot of money, and they were like upset that today on that huge move lower they weren't short. But who knew what was going to happen this weekend? And then this is today, boom. So how could you have handled today? And it wasn't easy. I got a little, I was a little, not say lucky, but I was risk averse. I was out of the way. I wasn't caught, so I was able to put bids in places I thought made sense. One of the places I thought that made sense was last October's low, 182 to 185. So I put in some bids there, and I put some bids in on Apple. Those were the only two. Oh, and Facebook. I figured those were the three names. If I was going to buy a deep bid, market, or deep in the discounted thing, there's a chance that it works, and at least there's got some volume and it has attention. So anyway, you go to the chart of the spiders again, and basically that's where we bounced from. Okay, I didn't come out of this level from my tush. I came out of it because I said, okay, here we go, 180, 182, and that all the way comes back to here, 180, 181. So maybe after from 208 to here, and thank goodness we didn't open it. I was thinking, the measured move would take you around here. It didn't even give you the chance to be a buyer there in the morning. So it just fully just pressed everyone out and created that swoosh. So, the question is what now, right? What do we know? What do we know as of now? You know that the trend that we looked at from here, okay, pretty much, actually, pretty much, where was the November trend? Where was that one? We were looking at this one. This trend is broken. Okay, that trend broke. That upper area is broke. I doubt that if we see a retest of that, I think, the bulls would be lucky. Maybe we do, maybe we don't. Now I guess we got to look at a bit of more of a longer term trend. This one comes back from this low here, and Well, it's somewhere right around there. And then I guess you got this one too. If you draw these lines, both of these broke there. So I guess let's go even a little bit. So from this, trends change and ranges resolve. And here you had a little lead time, and during this process of this sideways action, while everyone was scratching their head saying this range is horrendous to trade, you had the diamonds below the 200-day, you had the IBB forming a head and shoulders top pattern, you had the Russell below the 200-day, you had Asia falling apart, you had the DAX break below the 200-day. So a lot of reasons to lean to the short side, or at least get ready to get out of the way. So with that being said, here we are. This is your new point of reference, 182.40, and this is where it closed. So I did take a little bit long, and my average cost is like the after hours price of about 188. So tomorrow, if we're down a few hundred handles, I'm going to have to figure out how to trade versus level and see if this holds. If it trades up a little bit, it'll be a decent overnight trade. I think some guys had a lot of nice two-way action today too, because you had this move off the lows, okay, which was pretty fast and furious. But then once this like wedge type action, once this broke here, you kind of knew, look at that wide range 5-minute bar, get out of the way and figure out what's next. Either it was right there, and then I also, before going on Bloomberg, I'm like, guys, look out for a little 5-minute head and shoulders pattern, and I think that was 192 to 195, and that gave you that move down to 188. So these things still happen. But anyway, overall, you had your first move up. They gave you an extra little move here, and then that little triangle broke to the downside. And now tomorrow we'll figure out if what the action is. You now have a new range probably. The question is, what does it want to do? Does it open up tomorrow lower and make a higher low, and you could buy versus this, and if it breaks this, you probably have to get out of the way? Or does it open up and try and just go back and forth and sucker more people in before figuring out what the next direction is? We shall see. What did the Qs do? Qs, I think this also, you look at trends and how trends break, and most people probably would have been out there. You also had your false breakdown, your false breakout there, and now look at this. I'm not sure if there's an out of sequence trade here, but whatever it was, wow, slicing through everything. Slice through here, slice through here. That was the day before. I guess pre-market it did get through this, and then I guess your last point of reference was all the way down here, which is where it stopped. It actually went below that October low that held for the S&P, and now it's well off these lows. You have, unfortunately, there's such a big travel range. It's so loose now that it's hard to gauge. You can't be like long, or you can be versus this morning low, because look how far down before that gets a retest. And then if you shorted the close after the size of the move down, it's a little not the easiest trade either. So if you wanted to, if you wanted to be flat overnight, that's fine too. You now have like support one here, where you'll see, this is how I would draw it tomorrow. Like if we're down a little bit, I'll say, let's see if this 98.77 holds. If not, this is bigger support. And then if we gapped up, I probably would say, here's resistance, yesterday's high. Perhaps take some off into that and maybe even reshort the gap fill. So lots of two-way type of thinking going on. And it was even today. I think after the big move we saw, some guys were reshorting Netflix when it was back up $3, $4. That's when I tweeted saying, you had to buy 182, 185. You probably shouldn't be buying 195. Same thing early morning Apple. Apple was awesome. Apple, I put in some bids below 95. I got filled. It showed relative strength. It gave you even a push from negative to positive. But then again, it's kind of broken. Markets are kind of broken. I don't think anything's going to be off to the races. And then, Apple came in a little bit. But, the size of this range, I was like, what, I'm going to stick with Apple because, at least I know that there's a buyback. I know that at some point maybe there'll be a way out. And this is the level that I started at. I started at right around, I think, 95.5. And I put some orders in all the way down to 92-ish. I don't remember exactly where I got filled, but it wound up being a good trade. And then if you followed me on the VTF, which a lot of people did, they bought it also, and then it gave you a good trade. And now it's got a huge travel range, so it makes it tough again. Here was your, this is when Apple broke the low end of this range. Remember this bear flag? Here was your pull. Here was your gap down after earnings, below every moving average. Took out the 200-day, made a nice little bear flag for continuation short, and now came well off the lows. So the question is, now we'll do some time here. Now it could maybe do some time between 103 and 111. And then also if it opens lower, maybe there's some spots to buy the dip versus that. So that trade kind of changed. But again, I know people fall in love with their stocks, but Apple showed relative weakness way before. A gap down after earnings that was never filled, and then no bounce right on the lows of a range. Short one, get out of Dodge two. We had a few trades in here. Remember, I had a nice little red dog reversal here. Lower high, rolled over, broke this 112, okay, and then gave you a sharp move lower that if you weren't trapped in it here or here, there was opportunity. And if I went home flat Apple. I probably should have been long a little bit, but whatever, we'll see. Facebook was very scary. Facebook, I started buying at like 77 down to 75. And I think I broke even on that trade just because it just was very scary. There was no bids, no nothing. Here's when the upper flag broke to the downside. Your way to get out of Facebook looked good here. I know it did. I talked about it. If the market's going to hang in there, maybe this is a candidate to hang in. But then that happened. Boom. That's your get out of Dodge below the 8 and 21 day. You never know where it can go down to after something like that when it loses momentum. And that's your Friday follow-through trade to that. I think a lot of guys made decent money short if they were looking for a short. And then today, wow. At this point, again, you now have this huge move, and the question is, how much packing and filling do you do in here? Does it go back up and test 85.70? Does it open up down tomorrow and you could buy it for a red to green trade? At this point, you don't know. If you're long it today and it took some, and you think you're getting a gap up tomorrow, this is a candidate to take. Netflix was also a candidate to take. Here's your upper flag. Question was, could it continue the trend of breaking out above these flags, which it did for so long? But then again, once you get a little base on base and it gets a little long in the tooth, you always have to be a bit more careful. I remember this day, I listed Facebook and Netflix. Netflix potentially a trade above this 125.70, kind of like this. And what happened? It pushed above and failed. I did buy it that day and I got stopped out that day. Okay, if you didn't get stopped out that day, when we were down Thursday, you had to say, okay, is Netflix going to play downside catch-up like the rest of the chosen names? And it did right there. That was your signal. Get out of Dodge. We broke below the 8 and 21 day. What's Red Dog's rules? If you're in a momentum name and you're riding it as a swing trade, as long as it's above the 8 and 21 day, great. If it breaks back below it, you get out, you get neutral, and some people even get short. And then you figure out what's next. Is it the 50? Is it the 200 day? Is it going lower? But momentum names that are expensive can get hit fast. Same way they could squeeze shorts for 3 to 6 to 9 months until all of a sudden something changes. Well, something changed right here. Look at the chart. If you got short there, you got paid on Friday. Okay, if you got out here and you've been riding the trend, you did just fine. And then today happened. Okay, held the 200 day. One of the few stocks that held the 200 day. So this too has a huge range now. So the question is, what does it do in this range? So if you didn't want to be in any of it and you want to just wait till tomorrow, that's fine too. But this is something that if the futures are up 15, 20 handles tomorrow, this will be up a few bucks. If the futures are down 15, 20 handles, or more, maybe we'll look at it versus here. Now, there is a risk, which is why I think we sold off, that tomorrow you can have a huge down open just like 1987. That's what everyone's been saying all day on Twitter. The weakness started Wednesday, Thursday you had the break, Friday downside follow through, Monday the fear and the capitulation, and then people thought that was it, and then they got all stopped out on Tuesday. And then that was it. So we'll see. I did take a little spiders right around the 188-ish, after hours, and small. So if we're down 4 or 5 points in the spiders, I'll deal with it. If we're up 3 or 4 points, a little bit of follow through to today's reversal, or semi-reversal, or whatever you want to call it today. But whatever, we'll see. Oil's been weak, still weak, not finding a friend. People say, how could this happen? Everyone had opinions, but here was your last intermediate trend break, okay? And that was around 19. So if you got out of the way, there's 12. If you never touched it, just so again, my 200-day moving average rule, once it gets below the 200-day moving average, it's no longer investable, especially if it stays below for 5 sessions. And then you have support broken here, support broken there, et cetera, et cetera. XLE also. You know, look at this head and shoulders top pattern. I like to show this because at this point, XON, CVX, they could do no wrong. But then all of a sudden, head and shoulders pattern, broke the 8 and 21 day, broke the 200 day, and was it a seller's trap, and did it come right back above it? No. Stayed below it, and then bam. Okay, a lot of ways to avoid this damage here. Probably if you bought it up here, 97, it probably hurt when you sold it at 90. You lost 7 points, like, oh, that was a horrible day. But a horrible day at least didn't put you out of business, which it did to some oil traders. So now the question is, you know, is this today, let's see the volume here today. Is this today the capitulation type trade? A lot of volume there, biggest volume I've seen in a while. So, you know, maybe if you covered your shorts, great. If you looked for a long, you know, this could be one of those days, but you don't know if it is. A lot of people have tried that and whatever, at least there's some kind of benefit of the doubt there. Google, I didn't even touch today, you know, and it also came down to, you know, right above the 200 day, filled every gap. This was the first one when it changed. Then it got into this gap. A lot of people made good money short there, but anyway, not me. So now we have a new point of reference in Google. I'm sure Amazon looks the same. Wow, you know, they sold the earnings, then could not break above this. Here was your engulfing bar. Just to take a look here. Looked really good right here. So did the market. Look at that. Amazon holding up. Big gap here. Looks like it could break above this 540 and then boom. Get out of the way. If you did it over here, you only had a little day of follow through. Big deal. You did it over here, you saved yourself that and then this. And now we'll see what happens and you have a new point of reference. So like if you read my note, tomorrow, if you're a Redler All Access member, which you should be, you know, obviously I had a lot of different price points listed today, a lot of different support levels, a lot of different things and mantras and strategies. Like tomorrow, I'll be like, okay, the futures are down 15 handles. I'll be like, futures are down 15 handles, big move off of yesterday's lows. Let's see if we could hold above them. If not, this is your pivot, you know, and we'll use today's low and everything that we traded as a pivot. Either we open above it and it holds and we try and, you know, stay in this range, or tomorrow, futures are up 15, 20 handles. You know, market came off highs with a lot of people being worried about what could happen in Asia or in Europe. So now we'll see, can today's gap hold? And if it could hold, can we build and retest yesterday's high, which is today's high, which is around 195.50? And that's how I go about, you know, looking at everything that happens overseas, everywhere around the world, every place here with my go-to list and the indices to figure out how to make cash flow each day. But as of last Wednesday, I was basically flat equities, and I didn't have an overnight long on Wednesday, Thursday, Friday, you know, because it was too dangerous. Today, took a little bit long spiders just to have. I probably should have taken some of the strong stocks, but there's not that many of them, just to be in a little bit just in case. And I did most of that after hours when it was trading down like $1.50. So at this point, we'll see what happens. Tomorrow, if we're down a lot, I'll have to deal with it the same way, but I feel like I avoided a huge portion of this down move, and hopefully you guys avoided it too and maybe even made some money short. You know, we did decent day trades in the last few sessions also, and we'll go from here. A lot of guys are going to be talking doom and gloom, you know, 20% off highs, 30%, 2007, 8, no one knows anything. All we know is that we broke the range to the downside after weakness pretty much around the globe as well as in other sectors, and the trade has changed. Hopefully for the better. I think a lot of people in the firm had a great day if they bought the open and then trading back and forth. Traders can trade now, not just ride an 8 and 21 day trend with little volume where computers trade with computers, or trading that range where it looks great, you get long 6 stocks, the next day you gap down, looks like you're going to break down and gaps up, and that wasn't fun either. So this type of volatility, you know, definitely gives opportunity to those that are prepared beforehand and that can embrace it and aren't caught in it. Hope you had a good day. You know, there's a lot more to come this week, and get your rest, and I'll see you tomorrow at the call. Have a good night.